Hello guys, welcome to another backtesting video. Today I am going to backtest the data of October again. I was looking for sells due to my higher time frame analysis, which I will show you in my weekly analysis video. But in this video I will just show you why I took this trade and all the insights of this trade. Okay, so please be with me on these markets. Clearly we can see on the daily time frame there was a change of character to the upside, but we trade bias, right? I personally trade bias, so obviously this trade was, there was so many things in this trade, right? The market change character here, if we draw the Fibonacci retracement tool from here to, from this swing low to this swing high, also the retracement happened to the OTE level, which is the 60% retracement. And you can also argue the price has now made the higher low because it's now bullish. Obviously it has shifted structure to the downside and it can continue to the upside. That can be one case scenario. The other case scenario will be it has not given us, this Friday candle was not closed as a bullish candle, it was a bearish candle. So obviously it can also go down a little bit more and come to this demand right here. This is a demand zone because of this change of character. It's a daily demand right here. I have not marked this because there's already a demand right there. So also Monday can go down. So according to that, due to I'm backtesting, maybe in live markets I would not trade this because there was so many possibilities. And also one more possibility is this can be a left head and a potential right shoulder. From my previous strategy I know, and it has very high probability of making a right shoulder, breaking the neckline of the head and shoulders, and then continuing to the upside, right? So keeping all of that in mind, what I was looking for was, on Monday I was looking for buys, Monday I was looking for sells in GBP USD, whereas on DXY it will be the opposite. And on DXY I was looking for buys because of how this candle closed on Friday and on Thursday. But also one more thing is, there is a fair value gap just below the daily time frame. We also have to keep that in mind. There was a daily fair value gap. The market can go up, yeah, but it can first come down, fill up this fair value gap, and then go up, right? So my bias on DXY was bullish and GBP USD was bearish. The same sort of analysis. And also there was a fair value gap here, but it didn't make sense for me to come all the way up here, because if it is coming here, there is also a chance, that it might reject, obviously, after filling the fair value gap, but there is also a chance that it might continue to break structure and continuing to the upside. And we are very adaptable in the markets. I adapt to every condition. If I was wrong on Monday and I took a loss, I would be 100% agreeing with it. And if the market started to make a bullish move, then I will change my bias, obviously, and I will look for buys. That's how you become profitable. You have to adapt to the market. You don't need to be attached with one bias, right? That's not what I do. So if I show you the 4 hourly analysis, 4 hourly change character here, broke structure here. So there was a supply zone, there was a strong supply zone for me because of this break of structure and this fair value gap right here on the 4 hourly. The previous week low was also so close, so the market can easily go and sweep the previous week low early on. We will not be shocked. And according to the Asian range, I will decide my supply zones that I will trade, that I've told a gazillion of times, and you guys probably know by now how I trade and what I look for. And the same sort of analysis on DXY. On DXY, this was the H4 demand. I was looking for something like this. And now if I show you the hourly, on the hourly time frame, it was, I marked this supply zone here because of how the Asian range closed. Let me show you the Asian range. Until and unless the Asian range closes, we can't do nothing, right? So everything was making sense. But also there was one thing, the previous week low and the previous day low was swept very early on the week, right? That's a red flag for us to take a trade. Just because the previous week low and day low was swept so early on. What the fuck? Okay, so my marking was wrong, sorry. So I marked it wrong. The previous week low and day low was here, so it was not swept, sorry. So it was my mistake. On Monday it was not able to sweep this. So also one more, that means it's a high probability trade, bro, because the market can go here and we can target the previous week low if my bias is correct and we are bearish, right? So I was looking for this hourly supply zone and obviously I was looking for this hourly demand zone here, this M30 demand zone, because the M30 was cleaner than the hourly and the Asian range. And now let me show you the trade. Okay, so losses are part of the game, as we know. If we take a loss, doesn't mean that our strategy is wrong or I am a bad trader. No, it just means that it was just a losing trade, and losing is a part of the game, bro. If you, the moment you accept losing is a part of the game, and in the long term you're gonna be profitable using your edge, using your trading plan, following your trading plan, that's when you start to see success. On 11:45 there was an inducement, but we don't trade 11:45, we only trade after 12:30, which is 8 a.m. UK time. So probably I would take a loss here first because of this, but I would not take a loss here because I am now not a beginner. I know what I need to see in the markets. Look at this. After this 130 candle, I was looking for sells because my bias was bearish. Everything was making sense, point of interest, everything I wanted to see in a trade was here in this market, right? So what I did, I went to the dollar. The dollar was also showing bullish signs. The GBP USD was also showing bearish signs, right? So it was so certain for me that the price now might continue to the downside with the bias. But I didn't took the trade here because obviously I can just assume if I see an impulsive move like this, I would not enter right away on the impulsive move. I would wait. I wait for the candle to close because it might be a wick. So after this candle, I waited for the OTE entry on the 15 minutes because I cannot backtest the M5, as you can see there. And I waited for the OTE entry, entered with a 12.7 pip stop loss. Stop loss always above the previous high, and pretty much we lost this trade. This was a losing trade. Losing is a part of the game, no problem. And I was targeting this previous week high and previous day low. Sorry, previous week high and previous week low and previous day low. And also one more time, I tried it one more time. Why? Because this supply zone was made on New York session, as you can see, 18 p.m. right? There was also news on Monday, which was Empire State Manufacturing, not one of the high impact. US dollar news came out stronger, so I tried once more. I lost the trade here, tried once more. My maximum trades per day are 2. I take 2 trades per day, and if I lost 2 trades in a row, I get out of the markets, right? So that was what I was looking. And even on New York session, this was a losing trade. So overall, this was a losing day. Losing is a part of the game, and you're not gonna win all. You just learn from your losses. You either learn or earn from the markets. So this was a learn for us, and we have learned a lot of things here. How, like, if your bias is not, if the market has so many possibilities like this, it was not that clear, right? So just like I said, it can be a left head and a potential right shoulder. It's looking like it's making the potential right shoulder, and I have seen this happen a gazillion of times in the market. So I will not be shocked if the market decides to go up from here. Yeah, let's see. I will catch you on the other backtesting videos.